We start. The first additional information, the additional informations are there. They are all there. When you have your trial balance is done, but there are additional information. Without this additional information, you are having an incomplete record. But all this information that has come in, you have to adjust them. That's why we call it adjustments. So for additional information, it means what? Adjustments. Whatever you do now is still going to be the same in any other past paper in this type of question. So the first additional information was on closing on stock, right? They said the stock is at the end of the stock here is what? 31, 12, 24, right?
Yeah.
How much is it? The stock?
42,000.
42,000. So what does this stock mean? Closing stock. Because the year ends 31, 12, 2024, the closing stock. The next one is stationery. For stationery, what do we have?
The additional information has 600. And
In your trial balance, what do you have in your trial balance for stationery? 1,000?
1,300.
Minus.
And what was stated? What did they say about it?
600.
What was the phrase about? What was the sentence?
Stock of stationery.
Stock of stationery 31st 12 2024.
That is what was stated. Don't just say 600. Don't memorize for me. Understand. So read what was written so that you can understand. No.
Okay.
Yes. Read what was stated there so that you can understand. What was stated there, read.
Stock of stationery 31. It's December 2024.
So that means the stationery used at the end of the year remains 600. So that means the total amount spent on stationery was 1,350. At the end of the year, we had 600 left. So this is what? Your balance sheet. This goes to your balance sheet. And the difference between them, what's the difference? 750, right?
Yep.
Is it 750 or not?
750.
This is your expenses. This is your P&L account. This is your final account, balance sheet. The next one, depreciation.
No. Included in the business insurance.
Insurance, thank you. So we have insurance. So what was insurance about? What's the value of
It's a
insurance?
payment of 700, which is for John McGrath's
Private use.
Private
house.
Drums.
Entity. Business entity. The owner of the business should be separated from the business. So there's 700 for insurance, which is drawings.
And the drawings is 6,500.
6,500, right?
Yep.
So 6,500 minus 700 gives us insurance for this year. 0, 8, 6, 5, right? Is it correct? 5,800, right? I think we did it before.
I'll do it.
Insurance. Are you sure it's 6,005? Total insurance.
Insurance is.
5,800.
Insurance.
Are you sure insurance is? Please check insurance.
Insurance.
Insurance, business insurance, 1,800.
1,800.
That's help you, man. 1,800. So that's 001, 1,100. So insurance is now 1,100 for P&L account. Your profit and loss account 1,100 goes there. Your drawings is 700. Put it there. We have drawings already, right? Drawings in your file balance. How much is your drawing? That's 6,500.
6,000.
So put it like that. Just hold it on. We have 0, 0, 2 remaining 1, 7,200 right now for drawings on one side. But we move on. Now we go to depreciation. I think this one's, you wrote it already or you not?
I don't get it, Mr.
Where?
Why did you do it with the drawings?
Drawing is 6,500.
Okay.
But now there's additional drawing 700. You add it to your drawing.
Yeah,
Mister,
but
can you move a little bit, please?
we have to do the insurance and the drawings.
Drawing is still part of what you're going to do later on.
Okay.
But from now you have a new drawing. The drawing in your trial balance is already there. But now you have a new drawing because of insurance, which was paid for the private owner. For the private.
Yeah.
For the owner of the business.
Yeah.
So that means your drawing has increased. You are making adjustments. So your drawing will not remain 6,500 anymore. It will now be 6,500 plus 700. If there are no more additional information regarding drawings. I think that is clear.
I'll show you this. I need to write that.
Okay.
Depreciation.
Depreciation. For depreciation, you follow what was stated. Adjustment for depreciation. The first one is building, right?
Yeah.
What was stated about building?
2% of cost.
2% of cost. 2 over 100 of cost. What's the cost?
300,000.
300,000. 6,000. So that's the depreciation of building.
Yeah. So
The next
fixtures
one.
and fittings.
Fixtures and fittings. Fixtures
and fittings.
and fittings.
10% of net book value.
Fittings. 10%
Net book value.
of NBV, right? NBV is cost minus accumulated depreciation. What's your cost? Cost of fixtures.
90,000.
Thank you. Are you guys here too?
Yeah.
I want to be getting response, or I send you out of my classroom. I want response here. 90,000 minus accumulated depreciation. How much is it? 25,000. So what does that give you, please?
65,000.
Is she the only
Yeah,
one here?
65,000. 65,000.
I want you girls to talk now. You talk. Whatever is there that you are supposed to say. What does it give you now? 90 minus 25,000 is what? Do it. You can't see what? Now, cost is 9. What is the cost? Check your book. The paper, the trial balance. Check how much the cost is. Check the trial balance. The cost of fixtures and fittings. Find fixtures and fittings. In your trial balance, that is additional information. Trial balance. Find fixtures and fittings.
9,000.
What?
9,000.
Check it very well, please. Check the cost. Check the cost. Is it 9,000?
90.
What?
90,000.
90,000. Then what is your accumulated depreciation?
25,000.
90,000 minus 25,000. Thank you. 65,000. So, they said 10% of NBV. So, which simply means 10% of this times 10 over 100. 650 times 10. Check it very well, please. 650 times 10. $6,500. Yeah, 6,500. Yeah, 6,500. Thank you. Do you get that?
Yes.
That's fixtures and fittings. What else we have there?
Delivery.
Delivery van. What was stated about delivery van?
10% of cost.
Delivery van. What is the cost of delivery van? The cost of delivery van. I'm asking that, not you. What's the cost of delivery van? What? 85,000. So go to the additional information. What was stated in the additional information on delivery van? Is there? Check. Find delivery van. What was stated? Read it through. Read.
10% of cost.
Thank you. Delivery van is what? Say it out. I can't hear.
10% of cost.
Thank you. 10% of cost. That's 85,000. 10% is 10 over 100. Yes or no?
Yes.
100.
8,500.
Am I asking you?
Oh, sorry.
850 times 10. Why are you showing me? Say it out, yeah? 85,000. 8,500, 8,500. Any question about delivery van? Any question about delivery van now?
No.
No. What else do we have?
Rent receivable.
No. Let's go to wages and salaries.
Mr. Why do you skip that?
How much is wages and salary?
35,000.
Wages and salary? What?
35,000.
The total? In the total balance?
Yes, yes.
Okay, great. 35,000. Now go to the additional information. What was stated in the additional information?
Wages and salaries are to be divided 70%
Percent.
for employees and 50 for jobs.
Now we have drawings. 30% for drawings. So drawing has increased again. And 70% for employees, which is expenses. So our expenses now. Expenses. 70%, right? 70 over 100 multiplied by 35,000. What does that give you? 0, 0. 70 times 350. What does that give you? Are you the one I'm talking to here? Please don't talk. I'm talking to her. Seven five zero or 70 multiplied by 350. $24,500. Now go back to drawings. They said 30% for drawings, right? 30 over 100 multiplied by the same amount. What's the value of
The wages and salaries.
35,000? Thank you. Who's this? Close the door, please.
Close the door. Fat boy.
We move on, please. Now calculate it for 0, 0. How much? 9,500. 10,500. 10,500. So our drawings has increased now, yes or no? Yes or no?
Yes.
So now what's the total drawing? What's our drawing before now? Our drawings, where's our drawings here? These are our drawings, right? These are our drawings, yes or no? Now this plus this, what does it give you? Now the drawings now. In your balance sheet, drawings in the balance sheet. 7,200 plus 10,500, right? 10,500. What does that give you? 70,000. Are you sure? Okay. Thank you. So that's your new drawings. Put that in your drawings now. Your total drawings is 70,700. Now your statement of profit or your profit and loss account. In your profit and loss account, your expenses on wages and salary is 24,500. Do you get that? Please write down. Move with me. Loans. Go to loans now. What about the loan, please?
Loan. Provision to be made for interest.
You speak again. You're out of my classroom.
Yes, sir.
So go to loans, please.
Provision to be made for interest.
The term loan. How much is the term loan now? Who's going to talk now? Hello? Don't call his name, please. Now it's your turn.
Doctor.
Term loan.
Doctor. What? Can I go next to Vigo so I can see the papers, please?
What's up, this? He wants to sit next to me so he can see.
Okay, come.
Thank you, doctor.
Now it's gone. Term loan. How much is the term loan?
Term loan.
Just keep quiet.
No, wait, we got
That's
this.
what I was.
No.
You got this. Term loan is 120,000.
Term loan. 120,000, right?
Yeah.
What was stated beside the term loan? When was it given?
It was in September 1st, 2024.
1/9/2024, right?
So since it's term loan, we have to do it for years. So since December is in 4 months.
He has it. So why do you want to sit together?
Yeah, I just found it right now.
Okay. Go back to your seat, please.
No,
No way. Go
not
back.
vaccine,
No
doctor.
way. Go back to your seat. Thank
It's not
you.
perfect.
Now tell me about the term loan.
Term loan is just in September. but-
2024. Great.
but since it's
Now the additional information.
additional information. The rate of the interest is 6% per annum.
6% per annum, right?
Yes.
Okay. So we count. This is from September. Yes?
Yeah. Yeah.
It's received on September.
Yeah. So we have September, October, November, December.
Yeah.
We use the simple interest. Simple interest is 3 times half.
4 out of 12.
Wait, Mr. Is that
We can do 4 out.
formula?
This is math. Simple interest. It's not to do simple interest in math.
Oh.
Simple interest, compound interest.
What's P and T and R?
Principal,
And
the amount, which is 120,000.
Okay. Principal. Okay.
The time, 4 months, right?
4
4
months.
over 12.
And the R?
Rates,
Okay.
6%.
Okay.
So this cancels it. So we have 12 year 1, 12 year 10, right?
120,000 times 4 out of 12 times 6 out of 11.
So get that done, please. 10 times 4, 40 times 6, that's 2 40.
I can't do this in my head, it's so hard.
So what does it give you, please?
Let's go look at the calculator very quickly.
No. You should have done that before now.
Yes, doctor.
What does that give you, please? We have a lot to do, please.
No, you let's get the calculator so I can do it for you.
No.
Doctor.
12 year 12 times.
Mr. What's SI?
We have 1,200. 12 has gone there. So we have 100, right? 100 times 4. 400. 400 times 6, 2,400.
2,400.
I told you that
2,400, right?
Yes.
What did you get? 24,000. Are you not going to divide by 100? Did you divide by 100? I don't know what you did.
Okay, Mr. What's
2,400, right? Do we confirm that, please?
Yeah.
Do we confirm this?
Yes,
Okay,
Mr.
great. So that's expenses now. Interest on loan. Interest. That's an
Simple
expense.
interest, right?
Yeah, simple
SI.
interest, yes. So what else do we have here? What else do we have, please? Say it again, please. Provision for bad debt. Who's going to talk now? Okay. Provision for bad debt. You know where it is?
What?
Provision for bad debt. You check additional information. Provision for bad debt. This. Then you check your debtor. Read it again now. Provision for bad debt.
For bad debt to be adjusted to 4% of debtors.
For bad debt. What does bad debt mean? The debt that is not recoverable.
Yeah.
Debt goes back. So how much is it? They said 4% of
4%.
4% of what?
Where do we go? Over the chicken.
4% of what was stated?
For debtors.
4% of debtors, right? So what's your debtors?
Where is this?
Debtors and creditors.
No, you have debtors. How much is your debtors?
Debtors 70,000.
Debtors will be on the debit side. Creditors on the credit side.
Uh,
64,000.
70,000.
Where's your debit side?
Debtors is in the debit side, right?
Debit is this and credit is this.
Yeah.
So it's gonna be 70,000.
70,000.
70,000.
Great. So I have 70,000.
I
By 4%, right?
Yeah.
So we have 2,800. Yes or no?
Yeah.
Wait,
Ethan.
wait, 2008.
Continue to sleep. 70,000 they said it times 4%. That gives you 2,800. Do you confirm that, please?
Yes, yes.
Alright. So what is your total? Before now, what was the provision for bad debt? In your trial balance. Check your provision for bad debt in the trial balance. Trial balance, not additional information, trial balance.
64,300.
No.
No, wait, wait.
Provision for bad debt.
Provision for bad debts.
So this is your new provision. This is your new provision.
1,700.
Hold on, please. This is your new provision. What's your old provision? Old provision. How much is it, please?
4,700.
Are you sure?
4,700.
Provision for bad debt.
Oh, provision.
4,700.
Yeah, it's 4,700.
You confirm that?
4,700.
Thank you. 4,700. So has it increased or decreased?
Increase.
Decrease.
Before now, you made 4,700 for provision. It decreases.
Decrease.
Do you get it now?
Since that it's old, now it's new.
Is it increasing or decreasing?
But Mr. Can you repeat how we got 2,800? I don't understand that part.
You better put your mind here.
I am.
You're not.
Wallahi, I am. It's nowhere
We
here.
have, read what? You read it again, please.
4% on.
Keep quiet, please. Read it again.
Provision for bad debts to be adjusted to 4% of debtors.
To be adjusted by 4% of debtors.
Debtors was 7,000.
So 70,000, 4% 70,000 is 800.
2,800. So that's your new provision for bad debt.
Provision for bad debts.
Now, the old provision for bad debt was 4,700. So it has decreased, yes or no? So we call it decrease in provision for bad debt. And when there's decrease in provision for that bad debt, it becomes income. What do I call it?
Income.
So you're going to add this to your gross profit in your profit and loss account. But if it was an increase, that's an expenses. Do you know what I'm saying or not?
Yes, sir.
Don't write while I'm talking. Don't write while I'm talking.
We're stopped
This is the old provision. This is the new provision. Our provision for bad debt has decreased. Decrease means income. That means we gained.
And increases.
Means expenses. We
Yeah.
pay more. So because you've gained 1,000. How much do you gain now? What's the difference between them, please? 4,700 minus 2,800. What does that give you? 0, 0. That's 9. 1,900, right?
Yes.
So income is 1,900. So you gained 1,900. You add it to your gross profit. Do you get it now or not?
Yes.
Just add the 2,800 already.
Yeah.
There's an old provision for bad debt you made, but there's an adjustment through the additional information stating that 4% should be of 4% of debtor should be the new provision for bad debt. But now the difference is what was the provision for bad debt before now, and what's the provision for bad debt now? The provision for bad debt before now and now, you take them away to know if it is increasing or decreasing. Here it increases, it decreases. So because it decreases, it becomes income you gained. So gaining means you add to your gross profit. If it was expenses, if it was increase, that's an expenses. You add it to you minus it from your gross profit. Do we get it or not now, please? Do we get it or not? Now, either increase or decrease in your balance sheet, you take it away from your debtors in your balance sheet. It's going to be debtors minus the new 1,900. Where's the provision? 2,800, right?
2,000 is the new one, and 4,700 is the old one.
So minus the new one,
1,900.
You take it away. No, 1,900 goes to your profit and loss account.
Ah, okay.
The new provision goes to your statement of financial position,
Okay,
balance sheet.
that's okay.
If it is increase, you minus from your debtor. If it is decrease, you minus from your debtor in your balance sheet. Either increase or decrease in your balance sheet, you minus from debtors.
Listen, what's the word before 1,900? Income.
Yeah.
Yeah, income. Is provision clear?
Yep.
What else do we have?
Not required stuff.
Now we finish the adjustment. Now you prepare the trading profit loss account,
Dang, this is so
Prepare
like the
balance-
one I prepared for you before. So
balance
you do that.
sheet, right?
Yes.